Well, reading financial statements is all about allowing people who are not accountants or who have no involvement in day-to-day accounts to maybe very great expertise in marketing or production or other areas, but when they go to a meeting, or if they're invited to a board meeting and there is discussion about accounts, they may feel a little bit lost because the terminology doesn't mean a lot to them. And really, financial statements, as they're now known, are reasonably straightforward if you understand the basics. And while you might look at a financial statement with 20 pages, really you're going to hone in on the three main areas, which is the profit and loss, the cash flow and the balance sheet. And if you understand how they are made up, that the profit and loss is basically, is the company making money or is it making a loss? We're looking at things like turnover, we're looking at cost of sales, we're looking at admin costs, and finally profit. So you have things like gross margin, net margin, things like that are, once you understand them, they're fairly clear and easy, and we cover that on the course. When it comes to cash flow, it's different in the sense that it really matches what the inflows and outflows of cash into the bank. So you could be selling a lot of product and you could be making money on it, but maybe financing that means that there is a need for more funding in the bank, and if you run into trouble halfway through the year and the money runs out, then it doesn't matter what money you're making, the banks will put a halt to things, and you could be in. So a lot of companies actually run into trouble when they're very busy. So cash flow is an area where you need to keep an eye on the inflows and outflows of cash, and it's no harm if you're going to run out of money at the end of the year, provided you've recognised that and made plans for it. The balance sheet is really a snapshot of the value of the company on a particular date. So here you're looking at the assets and things like buildings and machinery and office equipment, things like that. And these are fixed assets, tangible assets, and then you've got the current assets, which are stock and trade debtors and cash in the bank, for example, and all of those should turn into cash within the year, so they're current assets. The creditors then are your trade creditors, people who you owe money to for product or you purchase from them. You could have a bank loan, it could be leasing. These are all things that are termed as creditors, and then you've got your net assets and then the capital reserves, which must balance, and the balance sheet is called a balance sheet because it must balance, and that is a good indication that everything else is right. So when we look at this in the training, we look at practical examples, we look at case studies, we look at how these things are calculated. So in the end, the terminology should be well known to anybody who attends the course, and they should feel much more comfortable attending board meetings or having discussions where accounts are discussed. And after all, the one thing I noticed from going from one company to another on a weekly basis is the accounts are one of the main areas for discussion, either at a board meeting or at marketing meetings or anything else. So a good working knowledge of the accounts will make everybody feel much more comfortable when it comes to discussing them.